2019 question paper, question number 4A. There is a theoretical question. What are the basis of charges income under the head income from house property? उसके साथ एक और में क्वेश्चन है, वो एक सम्स है, वो है कैलकुलेशन ऑफ ग्रॉस एनुअल वैल्यू. फ्रॉम द फॉलोइंग इंफॉर्मेशन compute gross annual value of the house property situated in Kolkata, and here net municipal value is given. So we have to convert this net municipal value into gross municipal value. Fair rent is there, that is 1,54,000. Standard rent is also there, that is rupees 1,50,000. Annual rent is given as rupees 15,000 per month. There is an unrealized rent, that is rupees 24,000, and vacancy period is there for 2 months. So from this information we have to calculate the gross annual value of the house. Now this is the answer for the question number 4A. Or what is the heading? Heading should be computation of gross annual value. There must be 2 amount column because there is a unrealized rent. For calculation of unrealized rent, there is another separate column I have drawn. In step 1, first we have to compare 3 things, that is gross municipal value, fair rent and standard rent. Now gross municipal value is not given in the question, so we have to calculate first what is the value of gross municipal value. Now in workings part, for calculation of gross municipal value, I have done 1,20,000 into 10 by 9. To convert net municipal value into gross municipal value, we must maybe multiplied by 10 by 9, because we know from gross municipal value to net municipal value 10% is deducted. So 1,26,000 into 10 by 9, this is 1,40,000. There is another method, alternative calculation, that is 1,20,000, that is the net municipal value, and 1/9 of this net municipal value we have to add this, that is 1,20,000 plus 1/9 of 1,20,000, that is 14,000. Total is 1,40,000. Both the answer is same. So gross municipal value is rupees 1,40,000. Fair rent is given in the question 1,54,000. Standard rent is rupees 1,50,000. Now the part is reasonable expected rent. What is reasonable expected rent? It is higher of gross municipal value and fair rent, subject to maximum of standard rent. That means first we have to compare gross municipal value and fair rent. Higher of these two is 1,54,000, but it exceeds standard rent. Reasonable expected rent cannot exceed standard rent. So we have to take this 1,50,000 as a reasonable expected rent. Now annual rent is given in the question, that is 15,000 per month. That means we have to multiply it by 12. So 15,000 into 12, this is 1,80,000. This is the annual rent. But there is a part in question, that is unrealized rent of rupees 24,000. Now it is not mentioned in the question whether the rule 4 of unrealized rent is satisfied by the SSC or not. Here we assume that it is the assumption that the rule 4 for unrealized rent has been satisfied by the owner or the SSC. So these 24,000 should be deducted from annual rent. So after reducing 24,000 from 1,80,000, annual rent comes to 1,56,000. Now the part is step 3. Step 3 is higher of step 2. That means annual rent of rupees 1,50,000, reasonable expected rent of rupees 1,50,000 and annual rent of rupees 1,56,000. We have to compare these two, and the higher of these two is 1,56,000. There is a loss due to vacancy. Now how can we calculate loss due to vacancy? There is a 2 months loss due to vacancy. Now 15,000 per month rent is given in the question. So you can multiply 15,000 into 2, that is 30,000. Another method is 1,80,000 is total annual rent. We should divide it by 12 to get 1 month's rent and multiply it by 2, that is 30,000. So after deducting this 30,000 loss due to vacancy from the hire of step 2, 1,56,000, we get 1,26,000. This is the annual value, gross annual value of the property. Another question is there for 10 marks. Question number 5. I have changed its previous year and assessment year for you. Your relevant previous year is 2021-22. So I convert it in 2021-22 and assessment year as per 2022-23. What is the question? Sri Shobhik Ghosh is the owner of 2 houses in Kolkata. Information relating to the 2 houses for the previous year 2021-22 are as follows. Now there are 2 houses, first house and second house. First house is let out for business and second house is self-residence, that means self-occupied by the owner. Municipal value is given, that is net. Within bracket this is net, that means this municipal value is net municipal value. So for the calculation of gross annual value, we have to convert it into gross annual value, gross municipal value, and this is 2,25,000. Fair rent is there, standard rent is there for both the houses. Annual rent is for only first house. Vacancy period is 1 month for the first house, and municipal tax paid rupees 40,000, out of which rupees 16,000 was paid by tenant. Interest on house building loan 52,000 for the house 1, and it is taken for the construction, and for house 2 this is rupees 36,000 and that is taken for repair. What we have to do? We have to compute income from house property of Sri Shobhik Ghosh for the assessment year 2022-23. First we have to make the headings. What is the heading? Assessee. First we have to write the name of assessee. Assessee is Mr. Shobhik Ghosh. Heads of income. There is what head of income is this? This is the income from house property. Previous year is 2021-22 and assessment year is 2022-23. First house, that is let out for business. So first we have to calculate gross annual value. In workings part, I have done this gross annual value. First, in the question it is given the gross municipal value. So first we have to convert it into gross municipal value. In previous sum we have already done how to convert net municipal value into gross municipal value. Net municipal value is given in the question rupees 4,50,000. It is multiplied by 10 by 9, we get 5 lakh for gross municipal value. Now the computation part, computation of gross annual value of house 1. In step 1 we have 3 amount, that is gross municipal value of 5 lakh, fair rent given in the question 4,20,000 and standard rent 4,30,000. In step 2 we have to compute reasonable expected rent from these 3. What is the reasonable expected rent? It is higher of gross municipal value and fair rent subject to maximum of standard rent. So first we have to compare these gross municipal value and fair rent, and the higher part is 5 lakh, but it exceeds standard rent. So we cannot take this higher part, we have to take this 4,30,000 as reasonable expected rent. Annual rent is given in the question, that is 4,80,000 and 4,80,000. So in case of step 3 we have to take higher of step 2. So we have to compare these 4,30,000 and 4,80,000. The higher portion is this 4,80,000. From it we have to deduct loss due to vacancy. in the question it is given the house is vacant for 1 month. So 4,80,000 is the annual rent, that means a 12 months rent. 4,80,000 divided by 12, we will get the 1 month's rent, that is rupees 40,000. Reducing this 40,000 from 4,80,000, we get 4,40,000 as gross annual value. Now, in main answer part, we take this gross annual value and we can give a note here as working note 2. We can write here that is working note no 2. Examiner can easily find out where is the workings. Less municipal tax. Now, municipal tax is total 40,000, out of which 16,000 paid by tenant. We know any municipal tax paid by tenant is not deductible. So, from total municipal tax, we just excluded this portion of municipal tax which is paid by tenant. That means 24,000. 40,000 minus 16,000, 24,000 is actually paid by the owner. So, the deductible part of municipal tax is 24,000. So, from gross annual value, we have deducted this 24,000 and get 4,16,000 as net annual value. From net annual value, there are two deductions. Deduction under section 24, clause A. There is a standard deduction at the rate of 30% of net annual value. Here net annual value is 4,16,000. So 30% of 4,16,000, that is 1,24,800. And interest on loan for construction. We know there is no maximum limit for house, let out house. So entire amount of rupees 50,000 is deductible as a interest on loan which is taken for the construction of the house. So total amount of deduction is the total of these two, that is 1,76,800, and these should be deducted from the net annual value, and we get 2,39,200 as net as income from first house. Computation of income from first house is complete. Now we come to second house. Second house is self-residence, used for self-residence. That means it is a self-occupied house. So according to section 23 subsection 2, annual value of a self-occupied house is always nil, and from it there is only one deduction. No municipal tax, no standard deduction should be reduced from this. Only one deduction is there, that is interest on loan. And interest on loan for repair is given in the question, that is 36,000. But in case of self-occupied house, there is some maximum limit for deduction of interest on loan. And interest on loan taken for repairing purpose is maximum limit of these is rupees 30,000. So, actual amount paid is 36,000 and maximum limit is 30,000. So, the maximum limit will be available deduction. So, from the nil annual value, we should exclude this 30,000 and it comes minus 30,000, that is income from second house. And income from house property is addition of these two. This is plus 2,39,200, that is income, and here it is a loss of rupees 30,000. So this loss can be set off from these income from the first house. So it comes 2,09,200 income from house property.